Okay, good morning, good afternoon, or good evening, ladies and gentlemen. Welcome you all to the 2021 CIBEL-SJTU joint webinar. My name is Prof Wang. I'm Associate Professor at UNSW Law and Justice, and also a member of the Herbert Smith Freehill China International Business and Economic Law Center. So my colleague, Deborah Haley, who was supposed to chair the panel, unfortunately couldn't join us today because she was sick and had internet issues. So I will be replacing her to be the chair and moderator, and I'll try my best to facilitate the discussions and to learn from our learned colleagues. And I'll begin the session today by acknowledging the traditional custodian of the lands on which we meet today, the Badago and Gadigal people from where UNSW stands, and also pay my respect to the elders, both past, present, and emerging. I would also like to extend that respect to other Aboriginal and Torres Strait Islanders who are present with us today. So the way we will introduce the panel today is I will briefly introduce all our panelists, and then we will have about 15 minutes panel discussions, more in the format of roundtables, and then we'll leave some time Q&A. And in the end, we're very honored today to have a really distinguished panel with us today to cover the different aspects relating to China's CBDC and international landscape from different perspectives. So I will begin by introducing our distinguished panelists before starting our roundtable discussions. Our first panelist is Dr. Xie Wen. Dr. Xie graduated from National University of Singapore with a PhD degree in Industrial and System Engineering. She joined Standard Chartered Bank since 1997 and now is in her current role as co-head of client coverage, corporate, commercial, and institutional banking China. She is a widely respected within banking industry as a very experienced banker and risk management expert with outstanding leadership and execution capacities. Dr. Xie is dedicated to building a technology-led cross-border financial platform, providing corporate and institutions with international high-quality financial services and making Standard Chartered China the preferred international bank and financial partner of corporate and institutional customers. So we're very pleased that she is with us today. Look forward to hear her insights. And our next panelist is Mr. Wouter Bossu. Mr. Wouter Bossu currently serves as a senior counsel for the legal department of the International Monetary Fund. He's of Belgian origin and holds degrees in law and business administration. Prior to joining the fund, he worked for the legal departments of the Belgian and European central banks. His specialties are the legal framework of central banking, financial markets, and financial stability. So it's very great to have him with us today, and we also look forward to learn from him later. And then our next panelist is Professor Wei Shen. Professor Shen is a Kuguan Distinguished Professor of Law of Shanghai Jiao Tong University Law School. And prior to teaching at the law school, Professor Shen practiced in major US and UK firms in Shanghai, Chicago, and Hong Kong for a decade, primarily assisting multilateral clients and in their China-related transactions like FDI, private equity, merger acquisition, project financing, and commercial arbitration. He's now teaching international investment law, international financial regulation, company law, international economic law, contract law in law school. Professor Shen's current legal research include international investment law, corporate governance, financial regulation, and international commercial arbitration. So it's really great to have Professor Shen with us today. And finally, but not least, is my colleague, Professor Wang. Professor Wang is co-director of Herbert Smith Freehill China International Business and Economic Law Center at UNSW Law and Justice. He was named as Australia's research field leader in international law by Australian Newspapers Research 2020 magazine. He has been a recipient of major awards and grants. His work explores the future of international economic development, often from the Chinese and regional perspective, and his present focus is on law and technology, particularly CBDC. So he has advised or spoken at events organized by international organizations and institutions, including APEC, ANCENTRO, WTO, etc., and also various private sectors. and also regularly interviewed by the media. So very pleased also Heng would provide his insight. Now, without further ado, I'd like to start our panel discussions. So we'll probably first start by a few questions from Dr. Xie. Because of her extensive experience at the bank, we would like to hear her insights from the business perspective. So Dr. Xie, can you probably start by giving us an introduction about China CBDC or eCNY? So is eCNY different from other CBDCs or stable coins? And also, do you know how the eCNY may be used in the business, either in China or beyond China?
Thank you. Thank you for the introduction. And I'm very pleased to be in this panel. And it's also a great pleasure to be together with the rest of experts and to learn from them on this subject. And from my point of view, is more coming from the commercial usage and how we could adapt to this new payment system. The eCNY is a digital version of renminbi, right? So it's a fiat, a currency issued by PBOC, and is backed by sovereign credit. Has a status of a legal tender, right? So that's the official definition, and is a substitute for cash in circulation. So typically we call it M0. It will coexist with physical renminbi, and it carries and pays no interest. So compared to the other CBDC, the eCNY is a domestic retail CBDC. So it is meant to improve the efficiency of retail payment systems. And it carries a number of features, like, for example, it's identifiable as account-based and a value-based. It has a hybrid payment instrument, and it also has a managed anonymity, right? So basically, you could actually use it for anonymous basis without the count for small tickets, but is requires very high KYC and traceable for high value tickets. So compared to the rest of the CBDC, and I understand that based on the purpose and the user, and typically there are two types of CBDC. One is a wholesale, one is retail, and so the eCNY is definitely a retail, is designed for retail payment purposes. And also actually it differs from the stable coin, right? Stable coins actually issued by commercial institutions. It doesn't have the same status of a legal tender, right? So it's not. So that actually differs significantly. And because of that, the usage and also the operability of eCNY versus stablecoin will be very different, right? So the eCNY will be designed to be with high interoperability with the rest of the electronic payment systems. If we're talking about the usage in the real life scenario, there has been quite a lot of tests, right? So just before the conference, we were talking. Since end of 2019, there have been huge amount of pilot tests launched in China, in Shenzhen, in Suzhou, and also there's a big plan to be launched in a pilot program to be launched in the upcoming Winter Olympics, right? To test different scenarios, different usage, where we can see a few things from the business point of view. I think number one, the features where it's both account-based and value-based, and also the features of electronic low-cost maintenance payment system, and the feature of managed anonymity, give us a good scenario where it makes this payment system a lot more inclusive, where someone without account, for example, in the Winter Olympics, if a foreign resident coming to China, they don't really have to go through a hassle to open a local domestic account, but can still get a e-wallet, eCNY wallet, and enjoy the digital payment systems, which in China, the e-channel is a major payment system nowadays, right? So another scenario, another feature of this eCNY is it is programmable, right? So because it's programmable, it comes with a smart contract feature, right? So that gives a huge amount of imagination for different usage and scenarios. One of the scenario we are thinking of as where for SME lending, where verifying the contract, verifying the usage of the loan proceeds might be difficult, but what you can do, you can use this programmable feature, the smart contract, define a certain predefined conditions. When the conditions met, for example, a service is delivered, or a project completion, and so on and so forth, to have the payment executed based on the predefined condition, right? So that actually makes the SME financing better control in risk, and also more efficient in verification and safer, but more available to SMEs. So it goes back to the original design of a more inclusive financing system for all, right? So maybe I stop there for the time being. It's just a very brief introduction on that.
Thank you so much, Dr. Xie, for the great information, and it's very informative. So I'm sure the audience will really appreciate that information, and that will seem to have quite important implications also for business, like banks and the clients. But I just have a quick follow-up question. What do you think then about the future of the eCNY? Do you think that's likely to be used very widely in the region and the world? And and if you already touched upon, if you could elaborate a bit more, like how do you think that really affect the business practice and service provided by the business?
Yeah, I think there's still a very long way to go. So that's why the central bank is now actually putting a lot of efforts to test different scenarios and to have small pilot programs. I understand that they have tested 1 million kinds of different scenarios, and to test the system, I think stability, and also make sure that it's available both offline, online transactions, because it's supposed to enable both, and also ensure that it does create that additional capability for more innovative business usage and business model, right? So, and I think probably based on the test result to see how it adds additional value to the already very efficient payment system, and then we could see how it could be more available and launch in a large scale. But given the design or the feature, and also the top-down design, I do think that it has a very, very bright future and for the usage, right? So first of all, I think it's interoperable with the traditional electronic payment systems, right? So it actually plays well into the existing financial infrastructures, right? So that's basically just add on additional payment to make a financing service more inclusive, more alternative tools. So I think that's one very, very good, important feature. And secondly, compared to the physical RMB, it does have the low cost feature, right? So it's easier to maintain, and it's easier to and it has better safety features, and has features prevent counterfeit and so on and so forth. from the verification point of view, it's actually more efficient for the banks. And also, it does have an open, it's designed to have this openness where the programmable feature where allows the authorized operators, commercial banks, to test different scenarios and figure out more innovative way to service a wider population. I think those are all very, very good features. And also, given, of course, with the internationalization of RMB, and this efficient payment system could be used in the region and in the world, right? So, but at this moment, I think the focus of the development is still very much focused on domestic retail payment usage, even though technically it's ready, but it has got quite a number of hurdles to overcome, and also I think only when the RMB is ready for internalization, then the ECNY can ride on that and provide a more efficient cross-border payment capability. Thank you.
Thank you so much, Dr. Xie. So that sounds very promising, and I guess time will tell. We'll probably wait to see what will happen, especially with internationalization of RMB. So we might come back to you later for further questions, but thank you for your insights. I'd like to now turn to Mr. Bosu. So, I mean, given your insight and experience at IMF, we would like to hear probably more from focusing on the legal perspectives. And I wonder if you could give us some idea, what do you think needs to be done legally to introduce CBDC? And what have been done now so far around the world by different countries, and what has been proven to be easy or challenging?
Well, thank you, Kun. And these are obviously very good questions. But first and foremost, just thank you for inviting me. It's a fascinating topic, and it's a very distinguished panel. So feel very honored to be here with you. I just want to step back 1 second behind your question. Your question makes a thing very clear, that is that there is a very strong link between money and law, and people sometimes tend to forget that. People think money is about finance, it's about prices, it's about accounting, and of course that's all true. But historically, law has played a very important role in shaping what money is and how money works. And it's only for commodity money, think about the shells at the time, or the salt bars, that money was not relevant. Ever since we had human civilization, dealing with money, the law has played a role in that, including in China. And because people sometimes, I find it always funny, especially in Europe, where people think, oh, the banknote was invented by the Swedish and the British central bank in the 17th century. That's not wrong. That's wrong. The banknote was invented 2000 years ago in China. And it had a certain legal framework, even at the time, as part of the empire's financial structure. So law matters, right? And if you then look at the things that you need to address in designing a legal framework for CBDC, it's very interesting to see that both Professor Wang in his article and Dr. Xie in her intervention, they have already talked about that. So the first thing that needs to be done is to make it very clear what it is. And when you talk about money, especially modern money, it is who is the obligor of the money, who is the issuer. And we've made it very clear in the article, but also in Dr. Xie's intervention, it is the People's Bank of China. And why is that important? For many reasons, but of course the main one is that it's zero credit risk, right? And so in other countries that want to issue CBDC, it is very important to make it legally clear, crystal clear, that the issuer is the central bank. The second element that is very important is the form of the money. And there is really a major challenge. And the challenge comes from the interaction between the technology and the legal framework. Sometimes the technology goes one way, but the legal framework offers constraints. And if you look today at central bank money, you really have two forms of central bank money that you all know well. You have the banknotes, and you have what we call book money, money on account with the central bank. Some economists call that reserve money. You can call it however you want. But this is basically credit balances in current account in the books of the central bank. And so when central banks seek designing their CBDC, they need to answer that very fundamental question: will our future CBDC be a digital credit balance on a current account in the books of the central bank? This is what we call in our part of public policy account-based CBDC. And again, this is different from how technological people see it. Or will it be more like a digital banknote? Okay, and why is that important? It is hugely important. If you look, for example, at the private law or things like private international law, which is so important if you want to promote the cross-border use of your CBDC, it needs to be very clear what your CBDC is under private law, under property law, under public international law, under private international law. If there is no legal clarity, the CBDC will struggle to be widely accepted. Now, when published these two slides there, I just want to show them to you what is a struggle. So remember what I said, a central bank basically faces the question, shall I issue my CBDC in the form of a digital banknote or like a digital account balance? This is a statistic. We reviewed all the central bank laws of the whole world, and we asked ourselves the question, is the central bank today allowed, and here it is, to issue digital account balances to the wider public? All right, so we are really in the realm here of retail CBDC. Wholesale is much easier. We're in the realm of retail CBDC. And what can you see? Today, 85% of the central bank laws only allow to issue credit balances to the state, or let's say state institutions, to banks, and then that other category of employees. For 9%, it's not clear. Only 6% of all the central banks in the world can issue today digital account balances to the broader public. Next slide, please. All right, now we turn to the statistics for the concept of a digital banknote. And to be sure, China is following the way of the digital banknote. It's your concept is really one of a digital banknote. The wallet holder does not have a current account in the books of the People's Bank of China. And what you see there, the statistics are slightly better, right? Today, 23% of all central bank laws allows banknotes to be issued in digital form. For 16%, it's not sure, but still 61% of all central bank laws require that banknotes are made of paper or plastic. You know, the historical concept of a note, right, which is a piece of paper. So this really shows the struggle that countries have in terms of reforming their legal framework when they are designing the key features of their CBDC. When you can take away the slides, I just wanted to highlight that. So once a country has determined who will issue it, and it should be the central bank, and what will be the form of the CBDC, the next question is, of course, that it must be used. And monetary specialists, they have a very particular word for it. Money must circulate, right? It must be used in payment for transactions. And again, Dr. Xu has already, she used that word at various instances. And of course, how do you do that? Of course, you must have IT infrastructure, you must have financial infrastructure. But basically, two big questions arise. Now, the first one is legal tender status. And what we find, okay, what is legal tender status? Legal tender status is different in every country of the world, so it's complex. But basically what it means is that if you are a debtor of a monetary obligation, you can always acquit your obligation by tendering the currency that enjoys legal tender status. Now, what we find very interesting is this. All the countries that want to issue CBDC want to give to their CBDC legal tender status, including China, but including, so if you look a little bit at the world, who has issued? Two countries, the Bahamas and Nigeria, and then of course China and the ECCB, the Eastern Caribbean, are in pilot phases. Other countries like Uruguay have completed the pilot phase. But so all these countries, when they want to issue CBDC, they want to give legal tender status. Now, our point is that legal tender status is actually not that important, and that may come a little bit as a shock. But when you look at legal history of money, you have had great new forms of money that have been introduced without there being immediately legal tender status. Legal tender status tends to follow rather than to lead. It's very interesting in the CBDC world, we want legal tender status, but you face a big problem. How can you force somebody to accept CBDC in payment if that person does not have the technological infrastructure? And of course, you may have a public policy to promote, let's say, smartphones and wallets, but there are other countries in the world where that is not necessarily an easy thing to do, and so that is really a very big challenge. Now, when we look at what are the challenges, I think there are really two challenges, and it may be very interesting on the first one to hear a little bit your views. What we have seen is that in other countries, and my impression is that it is a little bit different in China, and I would like to hear from you why, but in other countries that all have issued per a two-tier system, as in China, the question has been, what is the challenge of the commercial banks to distribute the e-wallets and to play a role in the distribution of CBDC? And why is that? Because commercial banks can be forgiven for considering the CBDC as a competitor to their own money, right? And so we have had discussions with our members where this has come up, and the central bankers say, look, we don't want a tier 1 system because that means that we are responsible for the anti-money laundering, know your customer. Again, Dr. Xu has referred to that. That's a headache. We want the commercial banks to do that. They are good at that. Good. But what is the incentive for the commercial banks? So that's really a big question. No? And then a last point that I just want to share with you is this. Look, I think that CBDC is a fantastic idea, right? It's really about modernizing your monetary system in a world where technology offers so much opportunities. But we have to be very clear that it is just a new representation of money. The monetary unit is and remains the same. And so your CBDC will only be as strong as your monetary unit, right? In China, the electronic renminbi is renminbi, right? The electronic dollar will be an electronic dollar. And so sometimes policymakers think that CBDC is like a miracle solution to broader macroeconomic problems. It is not. It is not. We have to make that very clear. And so if a country wants to issue CBDC and it wants that CBDC to be successful, obviously it should not just focus on the technology and on the law, but also on the broader macroeconomic monetary fundamentals. And we see that sometimes, for example, where CBDC is offered as a protection against what we call dollarization, right? Dollarization is the use of another currency in an economy than domestic currency. Can be dollar, can be euro, can be renminbi, can be previously the Deutschmark. And the point is that just by issuing CBDC, you will not in and of itself convince your people to stop using a foreign currency if they trust more the foreign currency. And for those of your viewers who are interested in it, you can Google. We've written a very good, I hope a good paper. It's called Digital Money Across Borders. Just Google it. We make that point, and I think it's very important to policymakers to bring this home. I'll stop here, Kun. Thank you. Sorry if I spoke too much.
No, thank you so much, Wouter, for this great insights, and also to bring in this question, like, really we. CBDC is not a miracle solution. We have to consider those broader, put it into the broader pictures. I think that those are important questions to reflect upon. And I hope the audience will read your paper as well. And I just have a quick follow-up question, because you already mentioned that one of the key features of CBDC is the issuer is the central bank, right? Which means that you have no credit risk. So do you want to maybe tell us a little bit more about the relationship then among the CBDCs and stablecoins that Dr. Xie also mentioned, issued by commercial institutions, and the cryptocurrencies like Bitcoins? So what are the relationships among them, and what do you see as major legal issues or challenges here? In other words, do national law or international law need any substantial change?
Well, that's an enormous question, right? And so there's somewhat a different answer for crypto and for stablecoin. Let's start with the crypto. If you would have asked this question 5 months ago, this would have been a theoretical question. Today, it's no longer a theoretical question, because one country in the world has adopted Bitcoin as one of its two national currencies, right? And we all know, I think we all know which country it is, but it's El Salvador. And what is a cryptocurrency, right? A cryptocurrency has no issuer. You have to make it very clear. So a cryptocurrency is very much akin to what we used to have in our monetary system, a commodity currency. Think about gold coins, think about salt, bars, shells, long time ago. And that means that the value of a commodity currency is, of course, determined in the markets. And you have, by definition, volatility, right? If you look at the price of Bitcoin, it's literally a currency that is yesterday in hyperinflation and tomorrow in deflation. There is nothing wrong with price swings, but the very fundamental question is the price volatility of that asset conducive to the use of that asset as money? That's the very fundamental question. And so, and this is what El Salvador is finding out now. They have introduced it as a legal currency, as alongside the US dollar. And I think we will all observe over the next years how that will play out. There are people who are strong defendants of it. IMF staff has come out asking a lot of questions. There's for those of you who are interested in it, you can Google. There's an op-ed, a blog where we ask a lot of questions, and we are not sure. We will see over the next months and years what will happen. Now, stablecoins are different, right? So stablecoins are issued by somebody, a private entity, and of course, by definition, they have mechanisms to avoid those price swings of cryptocurrency, and they do that by pegging it one way or another to a formal, what people call fiat currency. I don't like that word, but let's use that word. Now, the fact of the matter is that there are no two stable coins that are the same. And so ultimately, as a legal matter, every stable coin is what the terms and conditions of the stable coin say that it is. Okay? And you have very different ones. We don't have the time to distinguish between them, but I want to point to two things, and they are really very important. The first one is this. Remember what my opening statement was, is if you go for CBDC, you must accept that money has a legal meaning. And therefore, before you issue, as a central bank, as a country, you must have the legal framework of your CBDC crystal clear. The fact of the matter is today is that for stable coins, that is not the case. And the proof of the pudding is in the eating. I will mention two of them that are world famous. The Ripple stablecoin, XRP, and the Tether. I mean, Ripple is in litigation with the SEC in the United States on aspects regarding to it, and we will see how the courts will decide. But there is litigation, and Tether has had discussions and litigation in New York and issues with the New York Attorney General's office. It shows that from a legal perspective, things need to be clarified there, and we really need legal frameworks that very clearly say that's what it is and that's what the regulatory treatment will be. Monetary systems don't like uncertainty about what it is or what it is not, no? And the other comment that I would just like to do, and this is not an original idea of me, other people have done that as well, is they have compared stablecoins with the issuance of private banknotes in the 19th century. That was very prevalent in Europe and in the United States. And it would be fair to say that at the time, monetary systems were unstable and had a lot of problems. In fact, many central banks were created to mitigate the problems that were created by private banknotes. And it's very interesting to see the evolution. We've had the creation of central banks that issued state-issued banknotes. But then we have had banking supervision, and then we have had deposit insurance after the Big Depression. And what is really interesting to see is that today, in most sophisticated advanced economies, most of the money is not issued by the state, it is issued by the banking sector, right? The M2 and the M3, the credit balances on checking accounts, savings accounts, etc. It is issued by the private sector, but it is very tightly regulated, and ultimately it is protected through the deposit insurance mechanism. And so I think the big question will be in our monetary system, will we see a similar development there for stable coins? Or will it rather wither away, or will it be prohibited? I think these are really the big questions that we face. The jury is out there, policymakers are thinking about that, but obviously it requires very careful consideration. And CBDC makes it very clear, a well-designed CBDC immediately makes clear what good money is. That is, it is risk-free, and also as Dr. Xie says, it circulates it has all the capabilities of circulating widely, quickly, and there is legal certainty, and that makes it a very strong. I think if it's well designed, it makes it a very competitive component of a country's monetary system. So I'll stop here, Koen. Over to you.
Thank you so much, Wouter, for this additional insights. I'm sure the audience have further questions, so we'll come back to you when we have time later. And I will now turn to Professor Shen. So Professor Shen, do you want to, you could also respond to the comments that has made by 2 other speakers earlier. And I wanted to ask you more broadly, so do you think the ECNY would affect the RMB internationalization? And if so, how? And also, what's the relationship between the ECNY and existing payment mechanisms?
Thank you, Professor Fan, for the question, and a big thank to Professor Wang putting up this conference. I also want to thank Mr. Busu and Dr. Xie for attending this conference. This is the second time to have this joint conference with NUS, and this is a very interesting topic, not only in China but also abroad. I have a couple of points to make. One is about the technical side of this CBDC. I'm not sure, although I have written a number of articles together with Professor Wang on the topic, and I recognize the key features as Dr. Xie mentioned, as well as Mr. Busu said. CBDC has many interesting features which probably will challenge the use of the currency we are using now. And this will bring great changes to the financial regulatory framework as well. I went to Bank of China once, and the staff asked me whether I have an e-wallet for CBDC. And I said, it's still in the on trial, right? It's not ready yet. And she said, it's good to install e-wallet. I can help you. Then she installed an e-wallet on my iPhone, and she installed. I observed how she installed the e-wallet on my iPhone, and the steps she went through were exactly the same as the step we went through for WeChat payment and Yuebao. There's no difference at all. And she said you need to have a bank account with the Bank of China. Then I can help you. Then I said I do. I did have a bank account. I also have the online banking for Bank of China. That's why she can help me. And she said you cannot use it for offshore payment yet. This is not available for e-wallet and for CBDC in the future, even in the future. And I said, that's okay. Now, because of COVID-19, I'm in China anyway, so that's okay to me. And she said, you can use, then I said, compared to WeChat payment and Yuebao, what's the advantage of CBDC? And she said, you will know when it's ready. I don't know yet. So I don't have the answer yet at that point. And so it seems to me there's no big difference between CBDC and WeChat payment as well as Yuebao at that point. So I'm still wondering how it will substantially compete against WeChat payment and Zhifubao or Yuebao. So that's one question I have at this point. Even totally agree with other speakers about the features and advantages, technological advantages it may have. So I really doubt about that. Just from my personal experience, that's one point. The second point is about this renminbi internationalization. I wrote a large number of articles, especially those articles written by Chinese scholars. And they said CBDC will definitely boost renminbi internationalization because of technological advantages it may have, right, compared to paper currency. So they also list some other features the CBDC may have. For example, US does not support the CBDC, but we support the CBDC. So I don't follow the logic here, but anyway, so the argument is the US government didn't support the CBDC, but Chinese government supports the CBDC. So we have a technical advantage, compared to the US. That's the argument. But I'm really doubtful about this argument and other arguments about this CBDC, about the interaction between CBDC and renminbi internationalization, because of some regulatory hurdles we may have to overcome if we want to do this renminbi internationalization. One is China is still having this strict foreign exchange control system. So does that mean CBDC, if we use CBDC, or CBDC is one day officially issued by the central bank in China, then this foreign exchange control system will be removed totally? Or CBDC will naturally or easily or technically overcome all these foreign exchange control restrictions? So that's one question. I don't believe that's the case. That will be the case. I don't think the Chinese government is trying to remove foreign exchange control regime entirely, and because of this CBDC, I don't think there's such an arrangement or there's such a idea. That's one point. The second point is even Mr. Zhou Xiaochuan, the ex-governor of China Central Bank, said CBDC is only an electronic version of renminbi, which means CBDC eventually does not create more liquidity to the monetary supply. If that's the case, then we still rely on central bank, or we still rely on central bank's monetary policy for renminbi internationalization. In other words, CBDC does not create more monetary supply or liquidity to the current renminbi liquidity. So these are two key points which bring me to, these are two the key points that cause me to suspect the real interaction between renminbi internationalization and the CBDC. In other words, I don't think a CBDC will substantially change the landscape of renminbi internationalization. We probably still rely on central bank as well as its monetary policy for renminbi internationalization. So in other words, the CBDC, though with its technical advantages, it doesn't change the landscape for renminbi internationalization. That's my view at this point. Thank you.
Thank you so much, Professor Shen, for your thoughtful reflections and questions, and also your personal experience at the bank. So I'm sure we'll have further questions coming back to you. And now I'd like to ask Professor Wang, so more about sort of the prospect. What do you think about the prospect of CBDC? So I heard the speakers seem to be quite generally, our first three speakers was like quite generally optimistic about the prospect. But Professor Shen also mentioned, the personal experience doesn't seem to be substantially different so far from the WeChat payment. So some doubts about how substantially they could compete with existing payment mechanism, and also, whether in terms of the, beyond China. So do you think that's more likely to be used, very widely in the region and in the world? So Professor Wang, what are your thoughts?
Yeah, thank you, Kun. And also I would like to thank Professor Sun. We have been very lucky to work with him for the second event with the Shanghai Jiaotong Guoguang School of Law. And also I would like to join Professor Sun to thank our distinguished panelists, Dr. Xie and Mr. Bosso, for taking the time out of their busy schedule to join us. I really appreciate that. And coming back to your question, I think I really think it's a lot of questions that need to be answered before we reflect on the practice of the EC and Yuan. A quick response to Professor Sun has mentioned about the how CBDC differs from WeChat Pay, Alipay. I think if I put my hat on the promoter of CBDC, maybe one is that the reports that they don't really charge processing fee or handling fees, if you compare with the current one. But however, they also have other sides indicating that in practice, there are reports that when you settle that, you have to manually put in the amount of the transaction, which is an additional step, if you compare with WeChat Pay, Alipay. But anyhow, I'm not handling those technical details, but they're just reports in that regard. And coming to the question about the future of CBDC, I would like to see that I think they varies a lot from one country to another. So for example, China thinking of the CBDC, as a way where, maybe hopefully, enhance China's role, international monetary system. But of course, there are many questions, as mentioned by Professor Sun, that they remain open. But you see the US dollar, digital dollar project is another one. They see that's a lot of challenges they are facing. They want to keep their current position as an international reserve currency. So, and also behind that, they also have a different issue like governance model and the values, behind it. So the currency is not really just a currency, as Walter mentioned, also about legal aspects, social value. Another example will be privacy protection. How do you? I'm sure that they'll have different standards of the privacy protection. At the end of the day, I will see that the keyword is trust. Whether you have a trust of the users, and that links to a lot of issues about your governance, the confidence of the legal structure, the confidence of economic performance, the confidence of the central bank, and also whether you can tell a good story, which is convincing. Then into more detail, I would see that, I think we can look at it in different perspectives. One is that if we slice that, it will be issue of technology and also regulation. So technology means, what technology you want to use. China's EC and Yuan does not really wholly rely on, blockchain, although they use some of the technology of that. But we know that the technology is fast changing. So how do you deal with that, and how do you deal with cybersecurity? Because you have those kind of issues. If there's a problem of the CBDC, I think there's a huge impact on the confidence in that. It's very difficult to predict because technology is, it's a kind of competition between, I would say, mouse and cat, and the regulation is another issue because you have to understand the technology and then you have to regulate. So that's the reason why I found that Walter's views on the legal structure is really important to understand how you deal with that. And that's ranging from data to to privacy, and also the relationship between different actors, the states, central bank and commercial banks, and also between the other businesses involved in this in the CBDC ecosystem. Because I think that CBDC is not only a currency, it creates a huge economic ecosystem, involve everyone from individuals to telecommunication companies, even for phone producer based in Shenzhen, Huawei, or to the Standard Chartered, commercial banks, central banks, McDonald's, and lots of actors. How do you delineate their roles, how do they tell the responsibilities of their, for example, KYC, privacy protection, data flow, how do you share that, whether they're able to, access the data of the CBDC. I know that's been more in the central bank's role, but they also have the issue about competition. How do you make sure it's a level play field between international banks, local banks, international businesses, and also others. So it's a very sensitive and also challenging issue to design regulatory framework. The second perspective we look at that is also, I think that Dr. Xie also mentioned that, I think that's hardware and software. You definitely need infrastructure. RMB internationalization, as Professor Sun mentioned, that it's easy if you use cash, you just use cash in another country. It's not possible for CBDCs, right? You go to another country, you don't have infrastructure, how do you manage that? It's basically impossible. So you need a lot of efforts in hardware, but it's more difficult because, are you allowed to install those infrastructure? Two, what's the technical standards? Chinese technical standards, European one or US one. Three, what are the regulatory issues? That's coming back to Walter's view on that. And also for central banks, are they allowed the data to be shared across the border? So these are the many, Pandora box and a lot of questions you have to answer. And also you have software as well. Besides the hard infrastructure, software, whether you have expertise, you have a 24 hours, 7 days a week, how do you manage that? The capacity of the regulator, central banks to deal with that, and customer service, because it's CBDC provided by the commercial banks or the 5 big banks of China, who takes care of that, to what extent. And the third perspective, I think we can understand that is about domestic, international. There's currently EC and UI deal with more domestic transactions, domestic regulation, but how about international perspective of that? Or, across mainland China and Hong Kong, the Great Bay Areas and so on and so forth. How to use that different context, settlements of trade, insurance, already have reports on that, insurance policy, how, to what extent commercial banks will develop new services based on that, how international commercial banks deal with different regulatory requirements, from their home country, their host country. So these are not only domestic issue, but also international issue. And of course, we have issues, as already mentioned by other panelists, interoperability, international cooperation of that, whether it be better to be dealt with by international organizations or regional ones, because they are not necessarily always being like-minded. So, so these are the issues I think. At the end of the final points I would like to make. I think essentially it's about the role of the market and the role of the government. We see as 3 hands: in the hands of the market, hands of the government, also hands of data, and how do you deal with that in the CBD system? We'll see a totally different world, whether we'll see a more divergent approach by different countries, and how the businesses will navigate through that, and how international organizations will be able to bridge that, it's really crucial. So I will like to close here, and I look forward to more discussion. Thank you.
Thank you so much, Heng. These are all very important points for us to reflect upon. And I would now start to open the floor to the audience. I'm sure you have a lot of questions to the panel. I already see audience started to post a question. So if you have any question for our panel, please just put it in the Q&A. And especially if there are questions that you wanted to be answered, you can put a like. So I will try to address as many questions as we could. So we have some questions. Dr. Xie, if I can start with you, so you mentioned about the anonymity of the CBDC. I think we have a question from the audience that if it's on the blockchain, how could it be anonymous? Because the government could be able to track it at the back end. And also another question is why did China choose to retain a retail banking infrastructure? Because in theory, PBOC could deal directly with citizens, cutting out any financial middleman. So I wonder if you want to try to address those questions.
Okay. Yeah, let me see. I try to unmute. I have some problem to unmute.
Sorry, Dr. Xie, I think you are muted now.
Okay, thank you. Yeah, those are very good questions, right? So I'm sorry about Professor Shen's experience. I think it's probably because the design takes time to get developed over time. But at this moment, I think that based on what we understood from the design, is meant to have two different type of a hybrid payment system, right? So it could be online, it could be offline. It doesn't require a bank account, right? So basically, they have 5 different types of e-wallets, where 3 out of the 5 does not require a bank account, where you can actually use the e-wallet based on IoT devices or a digital wearable devices and so on and so forth. Some of those would be launched. I think some of those were tested in Suzhou and will be further tested in the Winter Olympics. But the question about a managed anonymity is done. Basically, what they have put on the design is such that the database, there's a firewall between the system, the database that manages the eCNY, the transactional data, and so on and so forth. And there's multiple layer of safety. And it will be actually a firewall between that system with the normal, the normal transactional system. And also because of the 2-tier system, right? The central bank at the center, and with authorized operators, basically the big 5. We know the big 5. And then between the central bank is managing the whole life cycle of the eCNY, and the authorized operators are the ones who will work together with the central bank to develop all kinds of apps, right? Similar apps as what we have today in the internet or mobile net platform, right? So, and those apps will be available for other commercial institutions, like we call a level 2.5, like us, to work together with authorized operators, and to then make the circulation of eCNY with the public and create different scenarios of business applications. So, and there will be huge data protection in terms of what data will be used and so on and so forth. And then managed and for small ticket transactions, which does not require a bank account. Like, for example, the e-wallet was, of course, they have limitations in terms of transaction cap. So per transaction, 1,000 renminbi. And also it does have a daily cap, daily transaction cap. For those, because it doesn't require a bank account, it doesn't even require a face-to-face KYC. Basically, you just use the international mobile phone number and you can open the account. So those kind of transactions will be done based on using that particular e-wallet, and doesn't require a huge amount of disclosure of personal information. So that is how it's done. But of course, as Heng has mentioned earlier on, Dr. Wang has mentioned earlier on, there's a huge amount of regulations to be actually formed, right? So whenever there's a dispute, how do you manage it? And also, how do you balance between sufficient KYC for us to manage the financial system, because anti-money laundering, counter financial crimes, and all those measures, but at the same time, protecting the personal information and the privacy. Those are the details needs to be worked out. At this moment, I think it's still at the design stage, so it requires a lot more testing and through the different pilot programs to make it complete. Did I answer the question? Was there another question?
I think there was just another question is like, why did China choose to retain a retail banking infrastructure?
Oh yeah, I think there's I think that the design was purposely to prevent what do you call that,
I cannot hear you, Dr. Xie. I think maybe you had some internet issues. So perhaps we will turn back to you just in a moment when you're able to reconnect. Now we have another question about, probably this would be a good question for Mr. Bosu. So the question, if you could explain a little bit more about the risk when CBDCs are put into cross-border use. So once it's developed as in the international CBDC system, is it possible that the currency sovereignty of less developed countries will be harmed?
Sure. I mean, that's a number of good questions, no? And I think we need to step back a little bit. What is meant by the international use of CBDC? And it could mean a number of things, but I'm going to focus here on two big questions. So the first is how you basically use CBDC for cross-border payments, and where basically you transform a CBDC of one country into the CBDC of another country, right? So think a little bit about remittances, where, for example, I mean, as you know, there are many parts of the world where economically and financially remittances are very important. So think about, for example, I'm going to use what is closest to where I live. I live in Washington, DC. Imagine the remittances from the United States. If one day there would be a digital dollar, let's say to a digital currency in Central America, how will those two digital currencies speak to each other? How will they work? How they will be converted? And so there, the Bank of International Settlements, together with a number of central banks, including in the Asia Pacific region, is working very hard to understand what does it mean. How can we create a bridge between those CBDCs, so that exchange goes smoothly? And for those of you who are interested in this, the Bank of International Settlements, that's on BIS.org, has a lot of great reports there. Strongly recommended to consult those. Now, another question, and I think that's where the speaker alludes to, is this issue of what if CBDC of country A is used in country B instead of the domestic currency of country B, right? And this is, again, what I alluded earlier to as this term of dollarization, which of course can deal with other currencies as well, including euroization. And look, I think that the jury is out there. So some people say that it will be easier for citizens of country B to import foreign currency. Basically they need their phone. Previously they needed cash in a suitcase, right? Now you can use your phone to take digital CBDC with you to go to another country. So some people say this may exacerbate the dollarization. It's interesting. Other people say it's exactly the opposite, because governments can control technology. This may offer opportunities to increase the effectiveness of exchange controls. And so this is where I need to make this link with one of the points that Professor Shen made, right? How do countries ascertain monetary sovereignty? By issuing their own currency, by promoting their own currency, but some countries do that also by exchange controls. And so obviously the IMF is very interested in exchange controls. We have a specific mandate to oversee at least exchange controls with respect to current payments, which is like for goods and services. And we're following this very closely, and I think in the coming year one may expect some publications of us where we're going to offer some views as to, you know, as to whether this issue will come up and whether it is a major risk. So in sum, yes, it could create complexities and complications. And policymakers will have to give due regard to this issue as they design their frameworks. And this also means, by the way, not only from the perspective of the recipient country, but also the issuing country, in a way, would be well advised to give due regard to potential cross-border use of its own digital currency once it would be issued. So it was a very good question. Over to you, Kun.
Thank you so much, Wouter. I see that Dr. Xie is now able to reconnect. So I wonder if you want to readdress this question, like, so why did China choose to retain this retail banking infrastructure?
Thank you. Sorry, my I had my PC battery went flat. Yeah, on this particular point, first of all, I like to think that the commercial banks are still adding a huge value to the system. And I think one is that, as we said, that central bank certainly want to rely on the commercial banks to provide the KYC, which is a very important feature, right, to ensure that the stability as well as the safety of the financial system, right? So we commercial banks have established long-term, I would say that expertise in this regards. That's number one, right? Number two, of course, commercial banks are also we are the provider, M2, M3, the credit provider. So ensure that there's good balance. Where there's a certain leverage and credit to be provided to the whole the real economy to empower the economy growth, and that is also very, very important as well. And the commercial banks actually is here to ensure more efficient redistribution and financial resource, right, to support the economic growth. So that's why actually, if you look at this eCNY design, it's designed to be have this feature of disintermediation, right? So we did actually mention that it's equivalent to RMB cash. It doesn't carry any or pays any interest. So that actually is to ensure that people don't think that as because eCNY it does carry, is issued by central bank. It carries central bank's credit, so it's risk-free asset. It also pays well, right? So you can imagine that people can easily convert the bank accounts deposits into CBDC, and then it may cause a bank run in a scenario and causing huge financial volatility. So that's why in the original design, and it maintains a zero interest feature. Is the same kind of feature, carries the same characteristics and unique value of RMB, the physical RMB.
Thank you, Dr. Xie. So we have another question. So maybe that's a question for either Professor Wang or Professor Shen. What sort of recommendations, any books that could help us to understand the philosophy of money, legal framework, of the monetary framework fundamentals and interactions with alternative digital currencies? So I wonder if either Professor Wang or Shen wanted to address that, or maybe I think certainly their work, they have written a lot on this. I think their scholarship would be something to would be interesting to read, and also Ucherb also have written many articles, so those are probably good references. But if you have any additional recommendation, we could also send to the audience. Maybe after, if there's any additional books to enhance their knowledge on this. So there's another question. What provisions has China implemented to prevent
Kung, can I just chip in? I don't know what the other panelists think, but when I'm confronted with big innovations, I like to go back to first principles. And for me, one of the best books ever written about money is this. It's a small booklet by John Kenneth Galbraith, who was the he was professor of economics at Harvard, chief economic advisor of President Kennedy, and he wrote a wonderful book, Money, Whence It Came, Where It Went. And it's basically the history of money, but really explained through first principles. He doesn't talk, it's written in the 70s, so he doesn't talk about digital currency, but he connects money with human nature and with human folly. And he talks about the benefits of good money, but the dangers of bad money. I think that's a wonderful booklet for anybody to read up a bit. I'll stop here. Sorry for interrupting you.
Thank you. That's a great suggestion. So I think it's good to go back to the foundations, and maybe that's a good point to start with. I think Heng also wanted to have some input.
Yeah, I think it's been a great question, and also there's so many leading scholars and practitioners in this area, so it's hard to name of them. But coming to my mind, we have a CIBEL colleagues, like Professor Ross Barkley, Douglas Hanna, they have written widely on, central bank digital currency and other related issue. And also I'm thinking that, in the US, Professor Chris Braumer, also has written a lot of excellent work on that. And also I think that's been great of a lot of other textbooks, if people want to start with that, on international finance or international financial law and those international financial and commercial law, those are the issues which I think that be very important. It's difficult to give an exhaustive list, but I think that's could be a good point to look into. Yeah, thank you.
Thank you, Heng. So this is really an exciting area to both quite theoretical, but also practically, quite in policy perspective, very important. So it really deserves great attention. We're very glad to have experts from different perspectives to talk about this issue. We still have time for maybe some. So there's two questions. I'll probably raise it together. One question is, what provisions has China implemented to prevent the emergence of a new underground barter economy? Another question also related to regulation in China. What provisions had China made in the event there's no internet service or no power? I wonder if any panelists want to address those questions.
Maybe I can give a quick answer to that. Yeah, just first one, I think it's difficult to see that a barter economy. I think people still have to rely on the currency. I mean, basically it's impossible in COVID-19. It's difficult for you to travel, and carry your rice and drink and exchange for fruit and vegetable. I think that's a technical issue, but it's a great question. I really like it. And the second issue about running out of electricity, I think that's for my 2 cents, I think it's real challenging, because think of natural disaster, a breakdown of the system will have a huge detrimental effect on the confidence on CBDC. That's my 2 cents. Yeah. Thank
you, Heng. And I guess one last question from the audience. So, how can you split the eCNY coin when it is stored on your phone? Is it, is the CNY quantum safe? Would maybe Dr. Xie, do you want to address that question?
Sorry, I don't quite get the question. So the eCNY is delivered to the public through a wallet, right? So it's an e-wallet, and it carries a certain value, and the unit of the value is the same as RMB, right? So I don't know whether that addresses the question, and also on that point on running out of electricity, I understand that there was design. Of course, this is all based on the design. So the design is ensure such reliability that you have multiple sites and can cover a scenario of one city went off. I think a city system is one down, right? So if let's say your Shenzhen system is down, but if you are trying to do a payment in Shenzhen, you can still do it because there are other backup systems to be able to complete the transaction. So that's part of the design. Of course, it is to be tested in the real scenarios, and yeah.
Thank you, Dr. Xie. I think we've tried to address all the questions from the audience, and I'd just like to maybe give 1 minute for each speaker, just one final concluding remark, one final thought. So we'll probably start in the order, in the reverse order. So maybe I'll start with Dr. Wang in the reverse order. So Professor Wang.
Oh, thank you. I just want to see that actually CBDC, I think, is not standalone. I think it also have a strong interaction or possible connection, in the international economy with stable coins, cryptocurrency. They will affect, how businesses, and regulators deal with CBDC, and also I think the users at the end of the day also will face a situation of choose different currency and how. And I think the trust and the confidence is crucial. I think that's it's an area which deserves a lot of research. Thank you.
Thank you, Heng. Professor Shen. Sorry, I think you're muted.
Thank you, Professor Fan. I think it's interesting to see how CBDC is really issued and finally used by the general public, how it differs from other currencies or digital currencies. It's also interesting to see how Libra or Diem is finally issued and used, how they compete together with each other and how they affect or have a great impact on the monetary system as well as the financial regulation. I think it's a very new area, and it's a very interesting area to continue our discussion and debate. Thank you.
Thank you very much, Professor Shen. And Mr. Bosu?
Yeah, I would like to start by just reiterating a point that Professor Wang has been making, and that actually has been up front and center of the speeches and the writings of both Agustin Carstens and Claudio Borio, who are really the Director General and the Chief Economist of the Bank for International Settlements, the central bank of central banks. Money is all about trust. Yep. Trust. Money, trust. We have to keep that up front and center. And my second point is, this is at the end of the day part of a law faculty, right? So I think as a lawyer, I have to say the law has an important role to play. And it's really how the law manages tensions. And some of these tensions have come up. Law manages, but also reconciles those tensions, because innovation, caution, domestic, international, public, private, all these things that could cause problematic tensions, but good designed laws and rules and legislation can reconcile those tensions and make the international monetary system and the national monetary systems better and stronger. And I just, I look forward to following developments going forward, and congratulations with the wonderful seminar. Over to you, Kong.
Thank you so much, Wouter. And our final word, now I'd like to give it to Dr. Xie.
Thank you. I think it's been a great discussion. I learned a lot. I would like to echo Wouter and also Professor Wang has mentioned. Money is about trust, right? So if we were to say it as legal certainty and value certainty, exchange certainty, as well as circulation certainty, right? So I think lots of the innovation on the technology side is to enhance easy circulation with certainty and make it available, more inclusive and accessible in different scenarios. But the fundamentals of money, of the trust, the legal certainty, value certainty, and also in the international region, exchange certainty does not change.
Thank you so much, Dr. Xie. And I wanted to take this occasion to thank all our speakers for their excellent presentations and insights. I have personally learned a lot. I need to upgrade my knowledge on this field and probably try to have an e-wallet sometime soon as well. And thank you for presenting such insightful thoughts and also to make it a complex issue so clear hopefully the audience also benefited from this. And thanks for also for the Shanghai Jiaotong for co-hosting the event, and thanks for all of our audience for taking the time to join us and for the excellent question that has been raised. And also, very importantly, I wanted to thank all the administrators. So my colleague at CIBEL, Ms. Wenshen and Ms. Fiang Chua has really put great effort in to support the event, and without them, this would not have been possible. So thank you everyone for joining us, and stay with us. Hope to see you again at another of our events. Thank you everyone, and see you next time.